For more on the reports from Alphabet and Microsoft, let's bring in Fast Money friend Gene Munster. He's a managing partner at Deepwater Asset Management. There's a lot to go through, Gene, but I'm going to kick it off with a would you rather at this point, given the results.
Wow.
Microsoft or Alphabet?
Melissa, it's a pretty straightforward answer for me. It's Google, advantage Google here, not just because of the valuation difference, but I think that there is a light year gap between what Microsoft has talked about versus what they've delivered and what they will deliver. Again, they're going to be a critical part to the AI future, but just to put some context about what's going on. They're growing revenue about 7% a year. During the pandemic, it was about 18% a year. And before the pandemic, in fiscal year 19, it was 14%. Growth rate has decelerated. And so this is all about what's going to happen relative to AI. The price increase related to Copilot and Office is significant. That could have a 40% lever over a decade on their business. But I think you just have to keep things in mind. There is a lot priced in when it comes to Microsoft. If you turn the page and think about Google, this with what I rather, Google, on the other hand, there is a wall of worry with investors because of that 90% global market share and the potential impact as we move to an AI-first single result. And if we look back a decade ago, the paradigm is related to what happened with desktop to mobile. That also was a concern. If we went back and looked at some B-roll of our conversations then, that's what investors were concerned about. And ultimately, Google made that jump. I'm in the belief that Google, their 20-year lead in search, is going to inform better AI decisions. We don't see it in the products today. I think that they will deliver on that. And ultimately, I think that's going to be good for ad revenue. And I think they're going to have persistent growth for the next 5 to 10 years as they start to turn that corner.
How do you read the move of Ruth Porat into the role of CIO?
Feels like they made a role for her. She was tired of being CFO, so they just wanted her to stay around, wanted that continuity. And she's a class act and has some ties within Washington, and I think that that can be helpful to the company. I think the bigger piece in terms of the personnel is just Sergey Brin starting to spend more time. It's my understanding he's been hanging out in New Zealand for a long time and now is reported on campus for 3 or 4 days a week. And to me, that I think emphasizes their importance. And just to finally kind of put an underscore in terms of where Google is related to AI, this is not a new topic. Microsoft, this is a topic in the last 3 quarters. Google has been talking about this since 2017 as an AI-first company. Again, we haven't seen it, but I suspect that all that data, we know data and models and AI is advantageous. I think it's going to benefit their search revenue in the years to come, and I think Sergey is back involved with the company to see that forward.
Gene, it's Tim. So I agree with that. And I think Google is often seen as the one that doesn't get credit for a lot of the places that maybe they've dominated, and maybe that's the fear. And back to Ruth Porat, I think she unlocked a lot of value for the shares. And I ask you as an analyst because I think from a governance perspective and a transparency perspective and the ability for investors to get comfortable with the sum of the parts and the pieces, is Google cheap here? I mean, they seem like they're still not given credit for where they are in not just the core search business, which is the dominant one, but some of these other businesses which are starting to really pick up momentum.
The central question related to valuation is next year's numbers, and are they going to be able to achieve those? And so they just grew at almost 5% this quarter. Next year, the street's looking for 11%. They've grown for 2 consecutive quarters. If they can hit that 11% growth, this is cheap. This is it's not as good. It was lower before, but you typically don't get a company that has a pole position in a massive market that trades at a subpar multiple relative to the other leaders. And so I think we're going to fast forward 6, 9, 12 months from now and just continue to see this story move higher.
Gene, one last question. What's the read-through to Amazon here?
Well, I was thinking a lot about AWS, and what we saw was just incredible growth with Google Cloud and Azure. They basically didn't change from the March quarter. They're in the high 20%. And what we saw with AWS last quarter at 16%, they gave kind of informal guidance to expect that to be more like 13% for the June quarter. So we're going to see this big gap. So I think what it shows is I think AWS is going to disappoint. But what's probably more important relative to the Amazon stock is the commentary about AWS. I think at this point, the June quarter is a throwaway for investors when it comes to AWS. It's more about, are they going to say that the bottom's in the growth rate, we're going to start to move it higher? If AWS does not show improving revenue growth with the backdrop of cloud and AI, that's a major problem. I suspect that they will talk about better growth in AWS in the back half of this year.